let's get into today's lesson. So today it's a little bit different, and some of you are gonna have questions, but I don't know if I'm gonna be able to answer all of them. However, I'm willing to answer all of them. So let's see how it goes. So today we're gonna be talking about strategies. All right. So we're gonna be talking about strategies and what exactly are we supposed to navigate this whole uh, Forex trading thing? So let me start by saying, if you are a Forex trader, right, your capital is your biggest asset. Your capital is your biggest asset. Let me write this down so that people will remember it all the time. So your capital is your biggest asset. So what this then means is that you can only take trades if you are sure, all right? And I know that is also subjective, I guess, because some people will be like, but I will have analyzed and then thought, oh yeah, this is the good trade, and then things don't turn out to be the way that I would want them to be. Now, I'll give you an example. Let's say I've got a lot of things to talk about today. I hope we will talk about all of them. Let's say you are an intraday trader, all right? So intraday trader, what you are looking into is you wanna get into the market, see that stop and happen, and then take the market until the end of the day. So your TP is here, your entry is probably there at below close 13 AM. So that is what you're focusing on. You want to see the high or low of the day, and you want to trade away from it. So you're an intraday trader and you're looking for a trade. So your focus as an intraday trader is to trade certain types of trades. All right. So we've got London patterns, etc. We've got a lot of knowledge around how to navigate the market in BTMM. But you as an individual trader need to then say, this is the kind of trade that I want to take or I love to take. Maybe, for instance, because you're an intraday trader, you say, you know what? I love to trade only if the market gives me 3 hits to the high, because that gives me an assurance maybe on my TDI that maybe your MBO is moving here. That gives me my assurance on TDI that the third leg is a bounce on MBO, and maybe your Bollinger Bands are moving there, right? So you say, I want to trade this type of trade. So what then does it mean about you? It means if this does not happen, it means there is no trade for you. I don't know how I can make that clear and sound, because you will go out there, and because you are thrilled by being in the market, you just want to press buy and sell uncontrollable, because you do not focus on what exactly do you want. Someone might say, okay, my own type of entry in this intraday is probably the ID50. If I see the ID50, I will take the trade. So anything that does not have an ID50, I will not. So you probably wait for the ID50, all right? So that means your ID50 probably will be maybe around the 50 EMA area, sorry, the MPL bounce and 50 area right there, then you say, this is the only kind of trade that I wanna take. So with all the knowledge that you have in the strategy, you need to pick a certain type of trade. Pick that one, write notes about it, find it in the market, scan all pairs in the market, and look for that one particular type of trade and trade that. Or you say, I only want those that have 200 EMA moving across it, or I want ones that have 800 EMA. It depends whatever you want. But these are your rules. This is what you want. So as an intraday trade. Now, you then come to swing traders. I, for one, I'm a swing trader. I love to, hold the market for days. It suits me because I don't want to be in and out. So when I look for things to trade, I look for long-term types of trades. So sometimes some of the setups, I don't even share them because I'll be like, if I share this one, people are just going to jump in and think, oh yeah, we're about to sell. Or sometimes maybe the market just showed me something like this, right? And I took a sell right here. Then the market, I'll show you one of the trades that I took last week, which I closed this week. So then the market comes for me and it goes there. And when I do this, I usually do not put a stop loss yet when I'm trading this kind. I wait because there are some things that I'm relying on that tells me, yes, we're gonna continue as a sell. Then when I then have confirmed with higher time frames that, oh yeah, all this that happened on H1, on H4, it was actually an M. Then I can then put what? A stop loss. So this is me, and I'm not worried about holding even $100 loss because my account will allow that, and I'm okay with that, with holding $100 loss, and then it comes back into profit and eventually it moves into profit. If it doesn't do this, then fair enough. But my kind of entries or trades are all based on higher time frames, and sometimes they might take 4 days before they can move. And I will show you that in a second, and you'll be like, wow, I can't hold with this madness. All right. But that is who I am. I prefer having higher time frames. There are some people who do what we call position trading. All right. You may correct me. You guys know better about these things. Position trading, these people, they look more like on the monthly time frames, the weekly time frames, and they hold trades for literally almost the whole year or something like that for longer periods, right? And I'm not that kind of a trader. I'm not gonna hold for 2, 3, 4, 5, 6 months. That's not me. But I can hold for at least a week or two on a pair and just hold there, knowing that even when it's doing all its levels and all that, I'm just holding, because my aim or emphasis is to hold until a market maker cycle has been completed. So I want to see all those 3 levels push. I don't get out until I see them. And again, I do not take trades 2 pairs at the same time. When I am trading, well, sometimes I do. Yeah, sometimes I do, but not all the time. So when I'm trading, this is what I do. If I am to take OD USD sell, I make sure that if I'm going to take a second pair, it needs to be something related. If you have seen the way I trade, if I take, say, OD USD, you will find half the time I'm also trading NZD USD. If I trade Chef JPY, half the time you find I'm trading USD JPY. And I'm sure you've already seen a similarity between that. If I'm going to take Euro USD, then I'll take GBP. Uh-oh. GBP USD. But I rarely trade Euro USD. So disregard this for a second. I rarely trade that. If I'm going to take another pair that I love, OD USD, then be rest assured I'm going to take Euro odd because they go opposite. And so if I'm going to profit on OD USD, then I'm going to profit on Euro odd. Even Euro OD card as well can also join that list. But now another pair that I only trade it by itself is USD MXN because I haven't seen something that correlates with it smoothly and positively, great. So I don't really take this. And again, the chart that I showed you about correlation is very important. So you need to keep on checking it. So my pairs, USD MXN, Euro odd, odd USD, Shift JPY, USD JPY, and NZD USD. If you check my account or accounts, these are the pairs that I trade. If I'm going to trade anything outside this, it better be a good setup and a clear and easy setup. But all day, if I check my charts, these are the pairs that I look for and I want to see setups on. Not that I don't trade other pairs, but these ones are the pairs that I just love trading. And if I'm going to trade them in pairs, that is exactly how I do it. There is no any magic to this. That is exactly how I do it. So that's the kind of discipline that I want you to do. Remember, I said your capital is your biggest asset. So that is one thing that should ring in your head every time, that the capital that I have is my biggest asset. So if it means the whole week finishes and I do not find what I'm looking for, fair enough. There's nothing wrong with that. Don't be so enticed into just pressing every time. Pressing buy, pressing sell, pressing buy, pressing sell. Because the moment you start to have a string of losses, remember the market is about emotions. It will start dealing with your psychological mind and you will think, oh, you know what? This is not for me. I've heard people say this all the time. Um, people sometimes message me, people that I even have no idea who they are, and they'll be like, no, you know what? This is not for me. Someone messaged me last week and went by, I want you to trade my account for me. I'm very sorry. I know you don't do this, but I'm in a tight situation. And I'm like, whoa, what is this? Or your account is already lost and you want me to finish it. And then you blame me that I'm the one who finished your account. I'm not doing any of that. I do not do any of that. You get my point? Because people will try and say, I saw a setup there. Fair enough, you saw a setup, and then what did you do? I entered. Did you check this and that? No, I didn't. So that's your problem. There are so many things to check. Number one, if I'm trading OD USD, I need to check where NZD USD is. It's so valuable because if this is on level 3, I expect that to be on level 3 too. All right. If this is on level 3 and that is not on level 3, then I'm not touching OD USD because what will happen is they might consolidate and this guy might give us level 3. This is an example, right? If I'm trading Chef JPY and we're in level 3, I expect USD JPY to also be what? On level 3. And sometimes there's what we call market lagging. What we mean is they form a peak and then they go first level like that. This is Chef JPY, right? I'll just say CY. Then you have UJ. UJ formed a peak and then went like that. And that is all that UJ gave you. And now tomorrow is the second day, and you want CY to continue going up, then UJ will push up very hard to catch up. So because I missed CY, I'll trade UJ because UJ is lagging behind, all right? Or vice versa. And you'll find then when UJ is now pulling towards this to go into consolidation, this will be a consolidation day. It will do something like that. And then tomorrow they start together. So you find there was a rise, a consolidation, and the following day a rise, and a rise. No consolidation. Consolidation was only in the Asian session. You get the point. So these are things that you are looking at. So you really need to open your eyes and say, okay, this is the kind or type of trade that I want to trade. I hope this makes sense, guys. So you need to choose between being a position trader, which I think none of us are, intraday trader, and a swing trader. If you want to be a swing trader, then you need to deal with 4-hour time frames and all that, though your 15 minutes and 1 hour are for entries. And if you are going to be a swing trader, you need to deal with low lot sizes. That's the issue. There are no two ways about it. Don't try and enter the market, even if you see a setup, how good it is. Don't try and jump in with a big lot size thinking that things are just going to go your way. You'll be surprised. The market can pull on you and you can blow your account, or you can start crying or say my stop loss was hit and all that, because swing trading is different with intraday. On intraday, you can put whatever lot size you want and get away with it. But with swing trading, no. You need to calculate all of it. Yes, you have to calculate, but on swing trading, it's very serious to a point that if you can get in with the lowest possible lot size, then so be it. Because it will give you room to say, if this is your entry, and not only do you have a 20 minutes, a 20 pips stop loss, but you actually have probably a 50 or 75 pip stop loss. All right. Because you are on a sell with probably 0.05. Okay. And you are 75 pips stop loss, and your target is probably here with $200. All right. Maybe your loss is probably, maybe let's say $45. So you're willing to lose $45 or maybe 20 or 30, whatever. All right, the amount. But you're willing to get $200. So if the pair goes against you, you lose $45. If it goes your direction, you gain $200. That is exactly what you are targeting. But here, because it's intraday, your stop loss is going to be 15 pips away. And if you enter with 0.2, maybe your stop loss will be, I love using money. That's why MT5 is very good. Maybe say your stop loss is $15 and your take profit is actually $400. So you see the difference. You're on intraday, and you're more like scalping. So if they go against you, they'll just swipe your stop loss straight away because your stop loss is tight. You have a bigger lot size, and you don't want to be taken out, or you don't want your account to be taken out, sorry. So you want to make sure that your stop loss is tight with small amount of money. But if it does go your way, you go 400. Now, if they then break structures going down, you then put your stop loss in profit, break even, all right? Either in profit or break even where you entered. But this side on swing trading, break even is there, but you put break even probably after 2 or 3 days. You don't just say, oh, I'm profit now, I put break even. That's not how it works. It's a totally different story because the market can still come back. Okay. Now, This is part one of what I wanted to say, and I hope I addressed everything. But the most important thing is, guys, your capital is your biggest asset. So if you're gonna take trades, be very sure with them. If you're not sure, do not. If you share with someone and they say, "Ah, no, I'm actually seeing a different thing. I see a buy, you see a sell," stay away. All right. If you're not sure, stay away. Now, number two, we have BTMM as our strategy, right? But I will tell you this: there is nothing wrong with learning other strategies. Okay, there's nothing wrong learning other strategies. It's actually a very good thing, right? Personally, the strategies that I do use sometimes, or maybe let's start with this. You'll find BTMM was designed based on the Elliott wave strategy. Most of the stuff that you see there, they're Elliott wave. If you look at ICT or smart money concept, the things that they do, they are similar to BTMM. Some of them, they change the terminology, but it is all the same. There's nothing, there is more on ICT that is different from BTMM, but it is all the same. It serves the same purpose. You've got peaks, you've got all that. They'll call them with different names, but it's all the same thing, right? Now, you've got another strategy that I sometimes implement, and it does work most of the time, or 80% of the time, the Kangley range theory. Maybe some of you have heard about that. The Kangley range theory, again, let me just write it here, CRT. Kangley range theory came from ICT. So this came from Elliott wave, and with this, they have things common. So they're both more or less Elliott wave, though they have their own additionals. CRT came from ICT, all right, came from ICT. But if you look closely at CRT, you will find it is there on BTMM. We are already doing it, but you do not know, or you are not doing it on higher time frames. So I'm going to share that so that you guys can then go and do your research and try and understand what exactly is happening. All right, it's 7 a.m. and I think we're still within time. Hopefully you guys are not sleepy. Right. So I'm going to be teaching heavily on BTMM, CRT, ICT during our December and January period. I will constantly try and explain to you the way I use them so that you understand what's going on. Now, you know BTMM. So let's talk about ICT. There are several things that ICT has, right? And I don't want you to go there and learn everything because it will confuse you. So I want you to only focus on a certain things that will help you. Number one, we've got order blocks on ICT, right? So there are so many order blocks, like so many order blocks. But I want you to focus on mitigation block and breaker block, right? This is going to be your homework, but I'll show you what I mean. Mitigation block, breaker block, right? I want you to focus on premium and discount, because that's important as well. Premium and discount. If I think of something else, we'll come back and talk about it. All right. Maybe let's chuck in fair value gaps. I'm not a fan of fair value gaps too much because sometimes they don't really work, but they are very important. Also, all right, they are very important as well. So maybe mitigation block, breaker block. There is what we call 7 institutional order flow. If I'm right, for those who know ICT will correct me. Now, those 7, they come in their order. So you will find what ICT strategy says is that you need to look at mitigation blocks first. Let's say you're trying to find a trade, something like that. It will tell you that look for mitigation blocks first, and then they are high priority. That's what it means. Or later on, then look for breaker block. They also talk about liquidity void, but don't forget about that. Well, sometimes that's more like, I think, imbalance, if I'm not mistaken. If the market gives you news, it will come back and fill that gap and all that. That's nonsense, to be honest. It does happen, but don't follow that, because it will not happen straight away all the time. Fair value gap, I've said that. And then you have the order blocks, other order blocks. They work some they don't work. So you need to be very careful. And you probably see that in all these strategies, you end up also having price action, because price action is also one of the strategies where all these were also based in price action as well. All right. I'm not saying go and learn Elliott wave, price action, and all that. Okay. I'm not saying go and learn everything. Not really. But knowing some of it is going to help you. So I'm trying to give you the things that are relevant to you. So probably write these things down, right? We've got rejection blocks. I don't really use them, but they also do work. And then of course you've got highs and lows. Again, I don't really use them, but they are already there in BTMM, all right? So now, if I'm correct, correct me if I'm wrong, okay? If I'm correct, a mitigation block, you know what they mean? We always call it a test of the neckline. So a mitigation block, we are simply saying the market formed a peak like this, all right? So they formed an M like that. So a mitigation block is the candle here. Maybe it's a bullish candle. Yes, bullish candle. Yes. All right, a green candle. Okay. So it says the market will come to the mitigation block before it sells away. That's simple what it means. And for us, it's a test of a neckline. That's why sometimes you find the market will give you a peak formation, sell level 1, sell level 2, and then all of a sudden it does that. And then it does that. All right. And then you're like, what's going on here? Or maybe that was during news or whatever. They are actually going for a mitigation block or a breaker block. Okay. So that is all it means. The difference between a mitigation block and a breaker block is that a breaker block, you have a longer second leg, right? So your breaker block becomes here, and then again the same thing, price comes back and price trades away. So it's still a test of the neckline, but that is your breaker block and your mitigation block. So this is why I said these two, go and research about them, because they will definitely help you sometimes, even when you are counting levels, or even not just counting levels. You want to enter the market and you want to understand where the market is going to go with this pullback. It will sort of tell you where the market will go. So they will definitely help you. Now, premium and discount, what it simply means is, all right, I'm going to draw it here. Premium and discount, what it simply means is you've got maybe your intraday, all right? And then the market comes here. Then the market starts to pull back. It simply says you pull a Fibonacci 0, 50, 100. Okay. Fibonacci 0, 50, 100. So this is probably your 100, your 50, and your 0, right? 0, 50, and 100. So the market is pulling back and you have your Fibonacci there. What it then tells us is that you want to sell the market. Do not look at this area. All right? Do not look at this area. This is premium and this is discount area. So that's why I said premium or discount. This is premium, this is discount area. So these two are going to be all showing you the same thing. Now we're going to touch fair value gap as well on the same because it kind of works together as well. So it says, don't worry about discount. If price is on the discount side, do not enter. Enter only when it is on the premium side. If you are on the buying side, you worry about the opposite, discount and not the premium. I don't know if that makes sense. Okay, so you need to rewatch this video if you want to try and understand these things before you go and research. Okay, but if you need any questions, I'll definitely help you with questions on in terms of ICT as far as I use it. Like I said, I don't use everything because some of the things, they are subjective, just like counting levels. So yeah, I use some of the stuff. Now, then if the market comes to the premium side, we look over here, all right? You will find sometimes you have fair value gaps, okay? What are fair value gaps? A fair value gap simple means you had a red candle going down. All right, this is for a sell, right? A red candle going down. You had another red candle, okay? Maybe something like that. And then you have another candle opening. Oh, what's happening with my mouse? You have another candle opening like this. I'm going to show you on the charts. So because this is not touching with that candle, that's what we call a fair value gap. However, now listen to this. However, they love to use the fair value gap. They say the first candle and the third candle. So what they then look at is the low of this one and the high of this one. That's what we call a fair value gap because we are saying these should cancel each other even with wicks. I'll show you on the charts. Don't worry too much about it. I'll show you on the charts. But that is what you call a fair value gap. All right. So when the market comes here, it's looking either for a fair value gap or it's looking for an order block that is sitting here. Again, an order block, you're saying it's the last green candle before the red candle started coming out. All right. So the last green candle. Now, there are so many things that involve order blocks. That is why I don't want you to be ingrained in them too much because it will confuse you. But the market will, they say then on premium, the market will come either into the fair value gap or it will come into the order block, or sometimes maybe the mitigation block itself. It will come into the mitigation block and then you can sell from there. That's what they mean, all right? Price will pull back into those areas, then you can sell. So that's what you mean by fair value gap, mitigation block, breaker block, etc. So this is it in terms of ICT. These are premium and discount. These are the things that you only need to learn. The rest, I'll say, don't worry about it, okay? Now, watch this. We're not going to talk about price action and Elliott waves or support and resistance because you already know some of these things. Now, CRT also talks about time when you're supposed to trade and all that, which I feel it is nonsense, to be honest, but their strategy is also good because, like I said, it also works with us. We actually know about it. What do I mean? You have a shooting star, all right, or you call it a morning star in BTMM, okay? What we mean is you get a bullish candle, you get a hammer, all right, or whatever candle, or it's a doji or hammer or whatever, and then the next candle is going to be bearish. Everyone knows this in candlestick language, okay? But they actually use it as a strategy. And I've back tested this because we use it on BTMM. So I've always back testing it on higher time frames, and it actually works. It does work. But the principle of all this is what? Counting of levels. All right. Because counting of levels will tell you where you are in the market. And then these other strategies will help you to then take trades the way you are supposed to take them. All right. So let's go to the charts and then talk about these strategies on the charts, seeing them so we can understand what's happening. Like I said, I'm not going to focus on all of the things because some of them it doesn't work, some it does, some it doesn't even matter if you don't know them. It doesn't change anything. All right. So let's go to the charts and see what happens. All right. So I was trading Chef JPY. Okay. I was trading Chef JPY, and I'll show you how I came about this trade. So you all know Chef JPY, we agreed that we were on level 3 and my entry was here. Okay. And then I entered on this day, day 1. The market went up on me, day 2, and came down. I was in profit. Everything was good. They came back for an ID50. I added a position. They came down and everything was 100% good. Friday, which is the 3rd day, they went up again. I was getting tired of it because it started looking like a reset, but I knew it is not a reset. All right. And then they closed the market here, which was good. Day 4, on Monday, they open and they start going back up again. All right. Day 5, they sold again all the way down. And here I am, day 6, again, back up. So I'll explain, right? Day 7, then they sell. Day 8, they sell. Now, if you look at this chart, you'll find that here they were forming a peak. That is what made me take this trade, right? So by coming back up, they were forming a second leg. So the second leg for the 4-hour time frame came in while I was already there. So this is our first leg, and this is our second leg for the 4-hour time frame. So it came in while I was already in the market, all right? Now, with all the ID50s and stuff, ID50 here and pullbacks and all that, and a reset as well. This is still a reset, even though it is an unconfirmed reset, which I actually thought it was not going to do anything. Now, after that, then what happened here was the market, because this is the Monday, the market was actually forming the high of the week. All right. So the market thought we cannot just sell until we form the high of the week. Form the high of the week first and then sell. If you look at this from higher time frames, it makes a lot of sense. But if you look at it from the smaller time frames, it will not make sense to you. You will think, you know what? I think the market just formed an M and the market is forming a big reset and we're about to go up. Then you start being scared because you're not a swing trader, right? And I was not scared because I knew that's what the market was supposed to do. And guess what? My target was actually the 800 EMA. That is where I wanted to see the market get to. And the market got into that. Okay. If you look at the 4-hour time frame, then the 4-hour time frame will show you a peak formation there. All right. Peak formation. And then you can actually see your high of the week there. Now that I've seen level 1 and I've seen level 2, if I then count my levels and check, there are two things. Number one, is this going to reset and continue buying, or this is going to fall to form the peak right here? That is a question that I'll be asking myself to see what the market is going to do. But say the market is going to sell more, I need to see it pull back to the 50 before it can go down. All right. I need to see it pull back to the 50 before it can go down. Now, according to these other strategies, that's when you then incorporate things like what do you call this? The Fibonacci retracements to say, okay, I'm gonna put my retracement maybe somewhere here and say I'm expecting to see the market get into the 38.2 level there before it sells. All right. So you want to see a pullback get to the 38.2 level there. That's how you'll be using your retracement levels. The first one, it actually reaches to the 61.8. That is exactly how you use your Fibonacci retracement. Now, if we come to the 4-hour, let's see if there's anything else that we can identify. Now, here, if you're an ICT trader or you have knowledge about ICT, you form the first leg, neckline, and then third leg, right? And then after forming the third leg, you formed an order block right here, okay? Some people say the order block is the one with the highest wick, all right? It doesn't matter. It's still the same thing because they are more or less the same height, right? So this was our break of structure or change of character, okay? So some call it change of character, some call it market structure shift, all right? Because that is the first time the market turned around and it broke that low on a 4-hour time frame. So after selling, you have got big momentum of a sell, and then you start to have the market reverse. This candle right here, which you see as a red, was once green. So this candle was once green. It went to test the order block here. It went to test the what? The order block. So if you are an ICT trader and you put your Fibonacci here, all right, you are saying this is my 0, this is my 50, and this is my 100, right? This is your premium, this is your discount. So anything that is underneath this line, it does not matter. So what matters is anything above the line. So what do you see above the line which you think is of interest? Order block. That is what is of our interest. Now, this is a, what did we say it is? We said it is a mitigation block. Correct me if I'm wrong, but we said this is a mitigation block, right? So what we mean is this candle right here on the neckline is your mitigation block, right? So because part of it is under 50%, you only want to take the part that is above the 50%, all right? So you are saying either the market will reverse there or the market will reverse to the order block. So those are your two key areas that you're focusing on. Either the market will reverse to the part of that, or the market will reverse to the order block. All right. If you want me to teach more about this, I will definitely teach about it. If you don't want a recession, you just want to listen to me, I don't mind teaching you about it as weeks go by. I think that's going to be very helpful, but that is exactly what you're looking at. And you want to take your trade here. You want to take your trade here, right? That's where you want to see the market come into before it can go down. So that's what you're looking at. But on 1 hour, this was at an IT50, I think. Yeah, this was an IT50, but you couldn't see it. On 4 hour, actually, it was coming to retest an order block, right? So imagine that is how you could have traded ICT. Let's see on H1 if there's anything of interest. Right. Again, the same IT50, you can still say it was coming back to that order block. But again, it's hard for me to call this an order block because I want to see a green candle in this area, but I didn't see a green candle. So for me personal, right? If you're an ICT trader, it's fine. You can see an order block, whatever. But for me personal, I don't regard this as an order block. So I don't regard it. I choose to ignore it. All right. So I can't see one here. Now, the high of the week here came where? Again into an order block. All right. But like I said, these are the order blocks that I said do not worry about them, because focus only on the breaker blocks and the mitigation blocks, but not this kind of order blocks that appear everywhere, because this is still an order block. This is still an order block. So some of them, they won't give you any returns that you want. So they are probably pointless. Maybe that one could have given you that small buy. Some of them are pointless. There's no point looking at them, because red candles or green candles are going to be everywhere. So you need to be very strategic about it. Now, how did I use candle range theory with this? Let's go to the W1 time frame and I'll show you. So on the W1 time frame, you have the green candle, that one there, all right, which is a weekly candle. So what you do with candle range theory is this. You have a green candle and a big one, right? You mark it and say, this is my low and this is my high, all right? You want to see the next candle, which is this one. The next candle is supposed to take out the high of the first candle. So the next candle is supposed to take out the high of the first candle and then close below the high of the first candle. All right, I'm going to repeat this. The next candle has to take out the high. Can you see how it took out the high here of the first candle and then close below that high of the first candle? The moment that happens, then it means what you are then targeting is 50% off this candle, which is the green candle, 50% of this candle, or all of it. Or you might find this is probably the shift of the market at that particular point. It's the shift. The market is about to shift and go a different direction. All right. Now, as you can see, the market opened a new week, formed the high of the week. It even took the high of that. Sometimes it can even come and take the high of this one, which is still okay, but still expect sells, all right? That's why you see the market then decided to sell. So half of that was my target, but you can expect even the market to continue going lower than that. You can expect something like that. This will not work 100%. All right. That's why I'm saying mark your levels. Your levels will help you, because we were in level 3. That is why I was expecting that. Look at this right here. We were not in level 3. That is why the market did that, and then from there, it only came here and started buying. Or sometimes the market gives you a reset instead, okay, on smaller time frames. So you need to be open to all that and say, okay, I took a sell, but the market is still about to move. But the reason why I had confidence to take this, it was because the market had moved a full day cycling. All right. The market had moved D1 level. That is why I had all the confidence to see the market go down on this. I'll show you another example that I once took. That's quite a long time ago, but I guess it's also relevant. But all this, it needs you to scan the market and check these options. All right. So you go to Euro odd and see what I took this one time on Euro odd. Euro odd, I took a buy here. How did I come up with this buy? Again, there was this candle. All right. So I look for nice, beautiful candles, and then I marked the high of it, and then I marked the low. All right. You can even do this like now. You'll find this candle will be there already because the market is closed. So you'll see some of this. So this then took out the high of that and closed above the high. Sorry, the low, and closed above the low, or closed inside that kangaroo's high and low. So what do I expect on the next candle? I expect the next candle to be a buy. This is our shooting star or morning star. Sorry, our morning star. All right. Type of a candle, type of a pattern. All right. For reversals. So you're actually using it on higher time frames. That's why I say it is the same as BTMM. There's nothing different, but you're actually now using it on higher time frames. So you could have taken this buy. The only thing I took here was, I think I took only up to there and only on this candle, and that was it. But you can see how it continued going up. All right. So all JPY pairs this week had this kind of setup last week. Sorry, had this kind of setup last week. All JPY pairs. Okay. So I'm going to show you areas where it worked and where it failed. Look at this here, this area right here. It actually failed. Okay. Now that is where you look at resets and levels to see where exactly you are, because you're not gonna win everything. Now look at USD JPY. USD JPY, if we go to the weekly time frame, so again, high, low, but this one now, if you look at it carefully, you'll find it did not close. Well, it did close below the high. All right. It's only that there was a market gap here, but it did close below the high. And then what annoyed me, it actually took me out this pair. It went up during election news, and it what? It took out the high of both candles. Okay. It took out the high of both candles. And what did it do next? It sold the way I expected. If you come to the 1 hour time frame, this is how it looks like. So my entry was on this day, right here, day one. That was where my entry was. Day one, day two, day three, day four, day five, all in profit. Imagine, day five, I was in profit and targeting that 800 EMA on H1. And all of a sudden, boom. The good thing was my big lot had a stop loss inside profit. The small lot didn't have. So when I came back, I found only one position was running, and it was running on a loss. You can imagine my entry is here, and this is where I am. All right. But lucky enough, I had to close in small loss when the market came back, because I was still expecting to see that sell, but I didn't know how far it was going to sell for the rest of the week. Now, to add something to to this candle range. If you mark your high and low like that, right? And then you see that, oh, this candle took out the high of that and closed within. Now, for this new week, this one, what you want to see is the market coming back to the high of this candle, all right? That's what you want to see. You want to see the market coming back to the high of this candle around those areas there, or even outside, okay? Even outside the high. For example, let's talk about this example, right? You've got your high, you've got your low, you've got your high taken out there, okay? And then the market closes within the high and the low, okay? Then what happens? The next candle comes and interacts with the high before it sells, all right? So that's the same thing as well. So after drawing your line like this, you can then switch to the 1 hour time frame. All you want to see on the 1 hour time frame, this is the line that we have drawn. On the 1 hour time frame, you want to see the market. This was Monday, this was Tuesday. So you were not going to trade any of this. You were waiting for the market to actually trade outside that line. So I was expecting maybe the market was going to do something like this and then go back inside. So this is where you want to take your sell outside or on that line. That's where you want to take the market and then you sell. Unfortunately, they went further up. That was more like yeah, 152 pips. That was a lot of pips. I couldn't hold that much. Now, on Shift JPY, where I drew a line again, if I move to the 1 hour time frame, all right. If I move to the 1 hour time frame, this is my line. Okay, so this is 50%. This is 0 and 100 is below. So my entry was in these areas. Okay. If you don't understand this, I'm happy to share further in the coming lessons until you get to understand what exactly I'm talking about. But we are talking about strategies. Today, we're just going to be talking about strategies, all right? Because I think you need to take advantage of some of these things that these strategies bring, because it's very valuable, okay? It will help you when you are analyzing the market to say, okay, this is exactly what I am expecting. Some of these pullbacks that happen in the market, you can actually tell when you see them and say, okay, so this is exactly why the market did whatever it did. All right. Now, I know someone might ask, okay, what is next week's market move? I'll share with you what next week's market move is. Probably I'll try and analyze myself tonight and then send you guys what my expectation is. But as you can see, guys, this is very important. Do not be triggered in the market by things that are beyond your control. Remember last week when we wanted to trade these USD pairs, right? All they did was consolidate. I remember showing you this. All they did was consolidate. This was, I think, Monday, Tuesday, Wednesday, Thursday, Friday. It was all consolidation. Now look at what happened the following day, right? A new president comes in and the markets are just resetting around. So there is no clear direction here. There's nothing to analyze. I will say to you, leave them. Leave the markets to be. I'll find pairs that we can trade or that I think are clear enough for you to trade. But I promise you, from the way this looks, to me, this looks more like the market will push further down. It looks more like a reset to me, like the market will push further down. I do not see this market trying to buy at this point with all this. I'm actually expecting this market to actually go down, or maybe go down as low as this point right here. All right. I'm actually expecting the market to go down to that point. Because what you see here is sort of politics madness because of all these Trump elections and all that. That is why the market, you can see for yourself even from the daily time frame. I mean, even if you want to analyze from the daily time frame, what is there to analyze here? There is nothing to analyze. Those are the sort of things that you need to see in the market and say, guess what? I'm going to take a back seat and relax because there's nothing to trade. Don't be pressured into trading every single week. There is no point of trading every single week. You need to be very selective. That's why I said you need the type of trade, what to trade. You've got elections that happened, and I did not trade personally because I was busy, and I wasn't going to trade either. And I closed my trades, right? Now, there are other pairs that will definitely give you good setups. These pairs you will find won't be major pairs. So minor pairs are going to give you good setups because the stronger pairs will be moving them. But the major pairs won't give you setups. So the USD pairs might be doing all these ups and downs and so forth, but the minor pairs, because they are minor, they will continue moving the intended direction or the new direction, whichever the case is. But you need to be very careful, all right? So I will send you pairs that I think are actually clear. So pairs that are not clear, just leave them. Leave them, let them be. You want to calculate account levels on cut chef, all right? You want to count levels on cut chef. Look at this. So you tell me what is there to count. Yes, you can actually count and say on the 1 hour time frame, this is what is happening. But this is the 4 hour time frame. Tell me what is there to count here. There is nothing to count. The market is simple, just moving within the same area. It has never broken any high or low for a long time, since August. Since August, it has never broken the low or high. So you don't really need to be trading. If it's your pair, just leave it for now until it gives you a clear direction, something very clear. Then you can say, okay, now I'm ready to analyze this. Or maybe go to the higher time frames and see what higher time frames actually want. These are the sort of things that you are looking at when you are in the market. All right. So I'm going to open the floor to questions. Okay. I'm going to open the floor to questions. Someone is laughing to my $100. Yeah, it's possible to have $100 stop loss, guys. It's very possible. Okay. All right. So, all right. Someone is raising their hand. Yes, you can speak.
Hey, thank you. Thank you very much for this enlightening uh, explanation on all these concepts. I have actually found myself in a, maybe to cut it short, I found myself in a bit of a, what do you call it? An ongoing circle, trying to marry BTMM and ICT. So I think my problem has been trying to learn all those things about ICT without just looking at the key concepts. But my question would be, the market is ranging like this, CAD, CHF, together with the major pairs, just like you were illustrating. Have you managed to do the same with indices, volatility indices? Well, when the market is ranging like this, it's easy to just rush to the indices. Have you managed to do the same, to apply these concepts on indices, volatility indices? And does it work?
That's a very good one. Let's go there and have a look. The only thing that I know I have tested on Yeah, I did. I did. Last week I was actually back testing indices. What pair did I look at, by the way? I think I was on Jump 10. Jump 10 was my first. Yeah, I think I was on Jump 10. I did quite a number, and to be honest, the what you call this, the results were outstanding. I remember that, and I was like, wow, this is so good. Hey, yeah, this one is actually even still marked. Okay. Right. So if you look at Jump 10, the way it is now, remember Jump 10, we said it's an IT50 on the weekly time frame, and we expect to see only buys, right? If you come to the daily time frame, let's see the daily time frame. Right. So this is what I traded on the daily time frame. Though, these pairs, they pull back all the time. So holding them for a very long time sometimes won't give you any results. So you need to be very careful. All right. So I came to this one on this day, and I had my high, I had my low. And then after that, I had this candle right here, this one. I had this candle right here. All right. And this candle had closed above the low of that candle. All right. This is our candle number 1 and candle number 2. So I then said, I expect to see a buy on the third candle, and that buy is supposed to go 50%. So you can see it did not reach my 50%. Now that is what CRT theory says. Sometimes it might take longer for you to see the results. You can see how these candles then came down before they could go up, but they kept on swiping the loss right here. But it still doesn't change the overall direction of the market. However, on my back testing, I realized that it actually worked the way I wanted it to. If you then turn to the lower time frames, in this case, let's go to 1 hour time frame. So my high, my low is this one. My high is that one. This is another candle. I'm pretty sure that's where are we now? We're in a weekend. So this is my high, this is my low. No. Let me put straight lines. That's what will definitely help us. Because this is the daily time frame. That's why. Sorry, yeah. So this is the daily time frame. I'm not on the weekly. Now I'm surprised why I've got few candles. So this is the daily time frame. So I did this on the daily, not the weekly time frame. All right. And I expected a buy, which came here. All right. But like I said, I wanted to see 50% of it, but I did not get that 50%. And the market came down and came up. It actually went 1, 2, 3, 4 times going up until I was so tired and I said, this is it. And the market then came down, 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 down. Now, because they've traded outside, that is where then you take your sorry, your buy, and then you trade towards the high. All right. But like I said, volatilities, they pull back and forth. So sometimes it might be difficult for you. Right. Let's see if we have another example. All right. I think I saw something again on this one. This one, where was it? Yes. How did I find? Oh, man. This is what I hate about volatilities. They can't show us all the data. All right, anyway, let me try and plot the lines myself. Then I'll go to the daily time frame, okay? So you have your high there and your low there. Okay, let's go to the daily time frame so we can see clearly what we're dealing with. So you have your high there and your low there for the week, right? Now, can you guys see can you see this weekly time frame or not? Because this is too small. I don't know if you guys
Yeah,
can.
it's rather small, but I can follow.
Yeah. So what I want to explain is, can you see this candle right here? This one? It actually
Yes.
opened, took out the high of this one, and then closed below. So now, as soon as that happened, I knew that the next candle is going to be a sell, right? Now, if you do support and resistance, you'll understand this is your, what do you call this? I always confuse these pairs.
Resistance.
Resistance, yes. I always confuse these terms. So this is your resistance, right? So you're in a resistance area and you're actually reacting to it. And now you have the morning star or shooting star, whatever pattern, and you expect to see a sell. So that is how I saw that this market was going to sell, okay? And moving into D1, it simply means probably the high was taken out. The candle that took out the high is probably this one. So we were looking into entering here. All right. It's hard for me to explain because those candles were very small. So now if I say this is what took the high, you'll be like, what exactly is he talking about? But maybe let's see if H1 can actually show us. All right. So this is the high of that week, and this is the low of that week, right? I think I might explain it here. The high of that week, the low of that week. The new week took out the high here, this high, all right? It took out this high, but it made sure that it closes inside. I'm pretty sure this was the low. This was Friday. Sorry, Saturday. Yeah, I'm pretty sure this was Saturday. So it closed below the high. Now, what it means is the next candle will trade outside this high, all right? Or on this high. So that is where you need to take your sell and trade away.
Okay. Okay.
Does it make sense?
Yeah, it does.
So let me put demarcations and see. So assuming this is your first week, okay? This is your second week, and this is your third week. All right, I'm just drawing, but that is exactly how it's like. So your high, your low, and then after marking your higher low from higher time frames and also seeing the next candle taking out the high. So what you want is a big, nice candle. You want a big, nice candle. All right. Even if it has wicks, it's okay. Just use those wicks. A big, nice candle. Don't use smaller candles because they will be misleading. Remember, you want to trade 50% or the whole candle. So that's why I'm saying a big, nice candle will be so ideal. So the next candle, you want it to be a little bit smaller. Even if it's a small hammer, it's okay. Something like this, yeah, that would be near perfect. You don't want those that have long wicks all the way up to 50% like that. If that is the case, fair enough, but that's not what you're looking for. You want one that is what? That is that has a small wick. At least it will show you that it hasn't traded this candle. All right, it hasn't done anything to this candle. Now, what you want is you want the next candle to then come back to the high or take out the high, or even take out this high, whichever the case may be. All right, but I would love it only takes out this high, not this high. And then what you expect is a sell. It might be 50%. It might be the whole candle, or it might be the turning point. All right. So you hunt for this thing. So that is what happened here. That is what you see here. Oftentimes you see a very nice M formation there. And because you've counted your levels, you know that you're on level 3, and then you go straight down. All right. Let's see if there's anything recent that we can actually use. All right, let's find boom. Oh, there's nothing recent here. You can even use the monthly time frame, any time frame. All right, I saw a very beautiful example. Look at this one right here. High, low, takes out the high, shows you the perfect nice dodge. And then what happens next? The next candle takes out the high of that and sells. Is it clear, guys?
Yes, 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 it is. A follow-up question to that.
Mm-hmm.
Can you go back to that example?
All right, all
Boom,
right, all
what
right.
it was boom what?
There you go. Boom,
Boom
300.
300. So I usually get confused when trying to learn something new, but I'm
Mm-hmm.
sure you can also help me on this one.
Mm-hmm.
We are looking at that 10, right? Turning
Mm-hmm.
point. We have the bullish candle, the green one, and maybe we call it a doji or that
Mm-hmm.
pin, right?
Mm-hmm. Mm-hmm.
Then the the huge sell afterwards.
Mm-hmm.
But if we come back two candles before,
Yes.
we have a similar setup where we have that
Exactly.
bullish candle.
Yes. Yes. Here.
Yes. That was someone would have gotten bent.
Yes. Yes. Correct. Correct. This is why I said in the beginning when I was in currencies, I said, all right, number one, don't look for the one that has already traded the whole candle. Look at this one. It has already traded the whole candle, right? This candle.
Okay.
Yeah. So it becomes hard for you to then expect it to turn around when it has already traded the whole candle, right?
Okay.
However, number two, if we start counting levels here, I can assure you there should be a reset there. That
Okay.
was probably a peak and it went down for a reset and then it went up. So it's not like you trade this blindly because you saw, okay, this is what it did. So that's exactly what's going to happen. You don't trade it blindly. No. First of all, principal thing to do, count your levels, right? You count your levels, you are in level 3. You have seen this, you count your levels, you are in level 3, and you can confirm that you're in level 3. You get in, definitely you're going to be in profit for a short while and you lock in your profits and you wait and see. But if there are scenarios where you went level 3 and then you came here into a reset and then the market went up into level 1 and the market is here, which is in this case here, right? And you're wondering, should I take this or not? Okay. On some, definitely you're going to lose, but the most important thing is to look for setups where you know a cycle has been completed. And like I said, I personally would love to see a daily cycle or a full 4-hour cycle for me to say, I'm going to take this kind of a setup. For example, here we are in the monthly time frame, right? So imagine if this is the monthly time frame, imagine what happened here for this whole time. A lot would have happened. Look at that. This is all cells, all right? Such that even if you had taken the cell, maybe say, maybe let me just put a line and say, all right, you would have taken your cell here, okay? So this is where you would have taken your cell, somewhere there. If we go to the daily time frame, hopefully we'll see this. All right. Hopefully I'll keep seeing it. So do you realize that the high we marked is this part right here?
Yes.
And where we were supposed to enter is here. So there's no way you would have taken this without even seeing an M formation for a peak setup. You get my point? What you would want to see is the market forming that M in outside that high for you to then say, I'm taking a sell. So this was just a straight move of a trade. And at this point, it was so far away from that high to a point that even when you look at the higher time frame, you'll be like, I don't think this is a sell anymore. And here I'm on 4 hour. So it's too far away. Here I'm on 4 hour. So you are good dealing with the weekly time frame and these other setups, but you need to count your levels. That's the most important thing. Counting your what? Your levels. Because counting your levels will tell you where you are. And then when you see something like that on a weekly time frame, the reason why I'm dealing with weekly time frame is because it's the move for the rest of the week.
Right.
Yeah. Sometimes they will form that, say, candle there, and then they will form that piece, and then they will go down and go up. All right. And end like this. And then you say, but it did not happen. It did happen. The sale did come with this week, but because you thought it was going to be for a long time, they then formed a peak or reset or whatever and pulled away. All right. But your chance came, you saw it, and then they pulled it away from you. So you are good seeing it in key areas and most importantly, your levels. All right. So let me move back to the weekly time frame. I'm just showing you examples. Here, you could have traded the neckline. You could have traded the neckline. The high, the low, takes out the low, and then you enter from here for a buy. All right. Now look at this one. the market is moving. If by any chance this remains as is, right? If by any chance it remains as is, then be rest assured the next candle will go that way before it goes this way. If by any chance this candle closes the way it is, be rest assured the next candle will push that direction, maybe halfway or full or whatever, before it can go for a sell. For you to then see this clearly, again, counting your levels, right? If you go to the 1 hour time frame, what is the 1 hour time frame doing? So you can see for yourself, this is your high, this is your low, all right? So if it closes here, it means I'm pretty sure this is the whole week's move. All this that the consolidations you see here, it's intentional because they want to close it as a small piece like that, so that when the next candle comes, it will come and trade low to test this low, all right? And then it will start going up to a reset and then continue going down if it's going down. Does it make sense? So watch this this pair. If it closes the way it is today, today is a Sunday, right?
Yes, Sunday and Saturday.
It's Saturday for you guys. It's Saturday for you guys. So we want to see the market close today. We want the market to close today, all right, on a Saturday. So if it closes like this on a Saturday, the next candle will come back down here and then it will go up 50% or the full candle. Either way, it will come down, test the low, and then go up. I'm telling you, this will happen. Why am I so confident? It's because from the way I see it from 1 hour, we're actually at a peak formation level. You see the coincidence now. You are at a peak formation level. You are at level 3. So that's the coincidence. That's why I'm saying I'm expecting the market to actually do something like that. All right. And then from there it will sell. Reason being, we've got only one here, we've got two, and then we probably need the third one. So we want to see it do that before it does that. So keep that in mind. Problem with other ones, they're hard to zoom in. What else did I look at this week? Did I look at this one? Nah. I think I did. No, not this one. Crash 1000. Not this as well. CD1. So again, you've got the same setup right here. This will only help you guys on reversals, okay? So you want to aim for reversals. That's a good technique, because it's a type of pattern for us. So because you're looking for reversals and you're at key points, that will help you. Right. You've got this one. High. I don't like this one because this candle for me is small. The one that I'm marking the high and the low, it's small. I love bigger candles, but Fair enough, still, it happened. So you've got a high, low, take out the high of previous candle. And then, unfortunately, like I said, I don't like this one. This one did not trade on this high. It just quickly melted down. So this is not the type you would also want. All right. But then this one, it did take out the high of this candle. And then the next candle did trade on the high. All right. It did trade on the high. And what you have next is a free flow of the market for a long time. This is the daily time frame. Imagine if imagine this is the daily time frame and it's crash 1000. So that is what you mean when you say the market's crashed, because they will be crashing, all right, all through. Because of that, the market crashed because of that setup. So this pattern is very powerful. Like I said, it's there on BTMM. It's very powerful even when you use it on 15 minutes, because it tells you that your next candle is going to be a sell, or you are waiting for a sell and you want to enter on the second leg, and then you see that candle here and you see that doge there. You already know that it is time to sell, because the next candle will what? Will fall down. You can actually use that. It's actually a type of entry for you on the second leg if you want to use price action to actually enter. Okay. Now, I'm showing you a lot of CRT. Let's talk about ICT now, because we want to balance it up. All right. So you want to take this buy on boom 1000. Let's see if it followed what we wanted. First of all, you want to see your first leg, second leg, W, okay? And you want to see your market structure shift or change of character or break of structure, okay, or the neckline. So now after seeing this, the market has to retrace back. So you want to know how far the market is going to retrace. So take your Fibonacci tool and you do that. Okay, this is where your retest, your reversal started. So with your Fibonacci tool, you want to see the market reversing there. I know that I put it upside down, but it's still okay. And then this is your premium side. So you only want to be worried with your discount side. Okay. So discount side start at 50 to 100 and premium is 0 to 50. Even if it's vice versa, it's still the same thing. You want half of the retracement tool, okay? So in this case, what I want to see, so I'm going to draw a box so that it makes sense. What I want to see is the market reversing inside this box. So that's what I do sometimes. I draw a box and say, okay, I want to see the market coming into this box. So maybe the market is still up there. This is the weekly time frame, by the way. I want to see the market coming inside this box. Now, what is there in this box that I see, which is of importance? Number one, remember what I said? This is your mitigation block. Sorry. This is your breaker block, all right? Your breaker block has a longer second leg. So your W has a longer, so your first leg and your second leg is longer. So that means that's your breaker block. Mitigation block, the second leg should be shorter, okay? So within here, I have got number one, Just gonna change this into a yellow color. Number one, I have my breaker block. So here's my breaker block right here. It's within the red box, okay? But some of it is not. So I only want to consider what is in the box. So that is my first area where I am going to take my entry. If I want to take my entry from there. But again, you take your entry from lower time frames. Okay. Now I want to show you how powerful this is. So number one, I've counted my levels and all that, and this is what I see. This is the part I see. Number two, what else is there? What made us break structure here? There's definitely supposed to be an order block involved. I love using red candles. So in this case, I will use this red candle as my order block because it is the last red candle before the market was broken in that area. And then lastly, obviously on the second leg, I do have another order block, but I'm not going to be worried too much about it. Like I said, these types of order blocks, I don't get too worried about them, to be honest. So my point of interest is one, the order block that caused the break of structure, and two, which is 50% of the breaker block. That is where I expect the market to turn around. And the market is still here while you are doing all that. And then what happens next? The market trades inside that 50%, all right? And the market trades inside the breaker block, and it goes further into the order block responsible for breaking that structure, and then the market trades away. Now, having seen this, if you zoom clearly, which I'm gonna fail to zoom here, you will see again CRT model. High, low, take out the low, take out the low of that candle, and then close below. All right. And then what does the next candle do? Unfortunately, the next candle does not trade into the low, but it just continues going up. But then I've got other confirmations that are already showing me that this is a what? This is a buy. So I will use those confirmations as a buy. So probably your entry will be somewhere here or somewhere there, whichever area you want to put it. I don't know if this will show us on the 1 hour time frame. I really wonder. Yeah, we might not see it. Oh, there we go. There we go. Now look at it from the 1 hour time frame. The pullback we were seeing when we were plotting our stuff is all this. That's the pullback we were seeing. So can you see you can actually trade this whole pullback? Now, if you zoom, you'll find you were actually at level 3. So you have counted your levels and you can tell you're at level 3. Now, check this out. Number one, you can either enter here at second leg, or if you can't do that, you can enter at ID 50. You can enter at pull to the 50. There are so many entries as you go, because you know on the higher time frame, this is actually a what? A turning point. You have used both your level count, your ICT, and all that to determine where the market is going to turn around. Now, let's try and find something that is recent so that at least we can actually comprehend. I'm trying to find something that is clear, at least that I know you'll understand. But so far, is it making sense, guys, or I'm just talking to myself? Jock, is it making
Yes.
sense?
Yeah.
Yes, sir.
Are you sure?
Yes. Well, we'll have done more on Forex than volatility, sir.
So I'm not saying learn everything, all right? But learn some of the things because they will definitely help you. The stuff that I showed you. So if you want to join these strategies, if you want to, you need to focus only on certain things, not everything. If you do everything, you only but be confused as to what is really happening here. It's not going to make sense. You have got these types of order blocks where on the middle of the cycle or road, you've got this type of order block and price trades back into that order block and then it trades away. These are some of the types of order blocks. You've got bearish and bullish order blocks. I don't really like them, like I said, because they are everywhere. All right, they are everywhere. So if they are everywhere, then it's hard for you to then know, okay, which one is important? Because this one I can see price traded into it, but how about this one? Someone would have taken a buy from there. How about this one? Why not this one? Why not that one? You see, there are so many of them. And I know a person who trades fully ICT might understand all of them. But for me, I realized it's just a lot of information and it's not going to help me. But I realized mitigation blocks, breaker blocks, discount and premium and fair value gaps are very important. Let's talk about fair value gap because I think I haven't spoken about fair value gap enough. I think I haven't spoken about fair value gap enough. Let's see if we can find fair value gap anyway. All right, maybe let's use this as an example. This might be a very good example. So you have a high and a low price trade. Oh, sorry, you have first leg and second leg. Price trades away and then price starts to retrace. So you want to know how far will this retracement go? Okay. You want to know how far this retracement will go? Again, if I put a Fibonacci tool here, what do we focus on? 50%. So 50% is only this stuff right here. So if I draw a box, say from here to there, I want to see where price is going to turn around, okay? So I have my mitigation block right here, obviously is one of my few turning points, and I'll put my line there on the box because this is on the wrong side. I want 50% of my Fibonacci tool. Now, if you check clearly, you will find here you have a fair value gap. What do we mean by a fair value gap? We are saying when price is moving, I'm going to have to change my color for this. All right. We say when price is moving, we expect to see the lows and highs of candles touching each other. All right. We expect to see the lows and highs of candles touching each other. Okay. Here you can see the low of that candle and high of that candle did not touch each other. Here, the low and high did not touch each other. Here, the low and high did not touch each other. So all this is what you call a fair value gap. If they touch each other, maybe say this one and that one, you can see there is no fair value gap in there because they close here. There's a very small fair value gap. So you look at the first and third candle, not first and second, but first and third candle. So here and here, there's a fair value gap. Now, look at why the market traded back into that area there because of a fair value gap. It traded back and then traded away. All right. But you see these fair value gaps almost everywhere, which is why I said you want to look for only the important things and things that are at certain areas because you'll find them everywhere. All here, all these are fair value gaps. But they are of no use to you because they're just everywhere. The market will always print these fair value gaps. All right. All these are fair value gaps. There's no point getting obsessed about them. We only want fair value gaps that will appear around peak formations, and that's all. Anything else that appears anywhere, it's useless. All right. Now, here, the low of the first candle and the high of the third candle is my fair value gap. All right. So if I put it here like this, that is my fair value gap. So now, do you understand why price, when it was trading back, you almost knew where price was going to turn around? You almost knew that if price does not turn around on the mitigation block, it will turn around on the fair value gap, which is pretty much the same area. And that even gives strong, strong what? That gives you strong confidence that price is going to turn around at that point because both of them are actually in the same spot. So you're only looking at things on the 50% part, all right? This order block is actually real as well. But like I said, I don't like red order blocks. I like green order blocks. I like to call my order blocks the green ones, though they say the one with the highest wick is actually the order block. I don't listen to that. But yeah, this is where price was going to come to and then sell off. All right. So all you are trading here is the neckline. I think, yeah, it is the neckline of a reset, if I'm not mistaken. Yeah, this is a reset on 15 minutes. If you come to the 1 hour, so you will find an ICT person will actually trade this up to there, up to that low. They can actually profit from that up to that low. And then because you're a BTMM person, what do? You are waiting for a buy instead to go with the direction of the market. So that is the difference between you and an ICT trader, because you are now mixing both strategies to get maximum setups and high paying setups out of this. But I just wanted to show you the fair value gaps and all that for you to tell where. I love showing it on higher time frames because higher time frames will simply mean this is going to be there for a long time. As you can see here, the market left an order block there. But it might come back to this, it might not. So I don't like those kind of order blocks for that reason, that you don't know whether they will come back or not. All right. Let's look at this one. Let's see if we can see anything from there. This is a good one as well, but only for this part right here. because the market was coming into a fair value gap. But if you measure the 50%, you'll find this is probably not on the 50%, but maybe on H1 it is. So that is the difference. Remember what I was talking about when I said the market can form a peak, trade away, and then suddenly comes back, and you're asking yourself, what is this? And then it continues going down. They are coming for what? For your order block. That's what they're coming for. Your order block right there. All right. Let's see. So guys, if you want me to teach this almost all the time, how you can mix the two, I can do that. Next lesson, we can say, let's do proper analysis. Hopefully the markets will be stable by then. Let's do proper analysis using all of these strategies and see what we come up with. I'm happy to do that. I just wanted to teach you today, so at least you can.
Thank you, coach. Thank you, coach of all coaches. I celebrate you.
25.
Coach, please, can you just help me to zoom this place? Now, if I get your explanation well on the turning around, looking at this region here, where I think here we have this strong. We have this strong. You have already.
Sorry. What pair was it?
A bit.
What pair was it?
That pair is what I didn't even look at, but I didn't look at the pair. I thought it was the pair that you were.
One I explained last one? Because I think I
Yes,
clicked.
I think the one you explained. Yeah, I think this. So looking at this play, you have removed the one I'm talking about again. The one you explained last, is it this one?
All right, let me come back again. Is it this one?
There is a peak formation there. I think the thing is delaying from here. So let me see.
I've opened one with
here. This one. So looking at this place, I can see a nice the M that is coming like this. Now, this is a very long candle. The green candle is a very long candle, and I can see also the wick close above this.
Let me zoom in a little bit.
Is it a must for the next? Is it a must for the next candle to come as a retracement before they will move?
Yes.
Or the moment they beat, they should be going down. Which of the one is the best?
Yes. Thank you for that question. Let me repeat it again. So first of all, high and low, right? So you have your high and your low of that week. And then the next week, you want to see it only interested in beating the high of this week. So you want to see next week taking out the high of this week. That's it. Now you've got your two candles, and now you're interested on the third candle. So the third candle should either trade on the high of this week, of the first week, or take it out.
Okay.
So our entry is either on this line or beyond the line.
Okay.
Yeah. Okay. And then we hold. So this was a very good example, because what it meant was you were going to take your entry in these areas and then just wait for the market to go down. Now, if we go, because this is the daily time frame, if we go to the 4 hour, let's see how it looks like. Or maybe let's go to H1. So you see what I meant by that you're gonna see an M. All right. Look at that there. There. Okay. Because it's level 3. That's why I said you're gonna see an M. Wherever you're supposed to enter, it's gonna be an M. So you take your trade either here or here or here or here. It's up to you. But you're gonna see an M because it's level 3. If there is no M or W formation on that line or outside that line, then don't take it. All right?
Okay.
Yeah. Don't take it. All you want to see is an M formation, of which in this case, this is our signature trade. First leg outside the Bollinger Bands. Second leg within Bollinger Bands, though it was below the MPL, and then third leg bounce on MPL. If you take it on the third leg, then you go down with the market. So you saw this on the daily time frame, and you take it and you go with it. So the reason I'm showing you only on the weekly time frame is only because the weekly time frame goes for a long time. That's the only reason. But it does not mean if you see it on 15 minutes time frame, you can't trade it. You can. You can trade it on the 15 minutes time frame. There's nothing wrong with that. All right. I hope
Okay. Thank you,
that
sir. Thank
answers
you.
your question. So yes, the third candle
Yes.
is
Perfect.
supposed to trade on the high at least.
Okay. Okay. Thank you. Noted. Boss of all bosses. Noted. Noted.
Here I was just dealing with market structure and where I was expecting the market to go before it goes up. So I do some of these back testings. They are very good. Now look at this one that is happening now. This is on a daily time frame, crash 500. Not the best example, but it shows it. Like I said, if a candle trades more than 50% of this one, then I don't take it. For example, this candle traded almost more than 50%. Look at that. They're almost equal in terms of size. So I don't trade it. But again, the same concept worked. After taking high of both candles, the market tumbled down. It went down. But you were never going to know that. So yeah, I wouldn't have taken anything like that. I would have just let it go. All right. Step index. Okay, so let's look at step index. This is one of my pairs as well. I love it. I love this buy, man. It's so good. Well, step index is a buy on higher time frame, so you can see how it's moving. But I'm not seeing it. I'm not seeing it, though it's something similar here, but I don't like the first red candle. It's too small, though it's in the monthly time frame, but it's too small, so I wouldn't take it. Let's look at what is V75 showing us. Is there any of that? Unfortunately, I can't see any of that on V75. Even though I expect this pair to sell, but I'm not seeing what we are looking for. There's nothing like that here again. Jump 10. What is this one? This pair loves going up and down all the time. Did I do this one? I can't remember. I think I did. I can't remember if I did this one, but yes, I did. I did. This one was one of the best setups that I back tested. This was the first setup that I back tested. Now look at what I did. So I put in my high, my low, and then the next candle traded, broke the high. So you can see the next candle broke the high of this candle. And the next candle came outside the high as well. So I knew V50 was going to be a buy. Even looking at it from the higher time frames, I expected V50 to be a what? To be a buy. Because I saw that peak formation low there. Well, that's the only information available to us, unfortunately. So I saw that this was going to be a buy. Now, from these other time frames, when I saw this market, it was here. It was right here. I think I still have my back test positions still running. I took a buy there. That's why I got in. And I'm pretty sure they're still running. And look at where I would have taken them. Right there. See? Right there. But my low is this one, my high is that one, because we traded outside it. So I saw it and I said, this is what motivated me into back testing. And I went like, this is the best setup. And I applied the knowledge and straight away, that was it. And yeah. So after trading this one, I'm also expecting that probably maybe the market will form a reset and go up. The reason I'm saying that is because on the monthly time frame, we haven't even traded 50% of that candle, and 50% of it is sort of here. So you can imagine where I want to see the market go, somewhere there. So I want to see the market reset and continue going to there until, if possible, for that much. So just by doing that, I already know where the market is going to go. So now what's left for me is to start counting levels to say, yeah, and for exactly that's where the market is. So if I count my levels and move with the market, I know that now I'm in level 3, I'm expecting a reset and then move level 1. So when the reset comes, if maybe, let's say I didn't take the trade, when the reset comes, I can easily jump in and start trading the reset from there, expecting the market to continue going that direction because I saw this on the monthly time frame. So you want to scan your higher time frames every week, every end of the week on weekends. Go through your higher time frames and scan them. Check for this, check for this, check for this. If you see it, then flip to your smaller time frames, count your levels, make sure you're at level 3 for you to get maximum results. And then those false move week beginning will first go and take out the low or high of the first weekly candle, and then from there you can move in the intended direction. All right, guys, I think I've said a lot. It's already 9 a.m. now.
Thank you so much. God bless
yeah.
you.
So go and digest this, guys. It's all about learning, like I said. And if you do want me to talk about it more often, or actually start analyzing the market and you see how I bring them all together, I can do that for you in the coming lessons. I don't mind with that, so that you can understand how this whole thing goes. But those are the things that you need to learn. Take note of them, what you need from ICT, what you need from Candle range theory, and also blend it with your strategy that you know best. Then it will definitely help you in a long, long time. All right. So we'll do this again. I think next week, if you guys want to, you will tell me on Discord after watching the video again, if you still feel we need to redo it or find a live example that's actually happening, and then I can see how we can help each other out. All right. So thank you very much, guys. I think now I'll have to go and have my breakfast, and you guys go to sleep. I will see you very soon.